I'm curious to see if my video works or not.
Your turn yourself off. Hello and welcome everyone to this spontaneous live stream. It was a bit of a last minute decision by David and I. Those of you who follow us regularly will know we've been off air for some time. But we've decided to now begin a series of these streams. Today we're kicking off with forex, and there's a particular reason why we are streaming at this time. Obviously, we're here in the UK, so the London session has been and gone, and we're now waiting for the start of the US session, because one of the topics we're going to cover here is a question that we're asked all the time, and that is by traders who only have a limited amount of time to dedicate to trading and to learning to trade. How do they approach it? Because trading is marketed as you can do it anytime, any place, anywhere. All you need is a laptop, which is absolutely true. And also because we have 24-hour markets. But in reality, they may be 24 hours, but they are three very distinct time zones, three very distinct markets with their own characteristics, with their own drivers, with their own priorities, and also, more importantly, with different levels of liquidity. And what we have found after many years of being involved with the market is that if you are going to, if you have an ambition that you want to be a trader, but you can't give up your job and do this on a full-time basis, which we would always recommend is never do that, always, test the water, as it were. You have to, first of all, understand that there are these three distinct sessions, that the price action is very different in all of them for whatever you trade, but particularly so if you're going to go into the forex market. And to understand what happens, what are the issues that you can come across at what we call the crossover. This is just before the session opens, and at the end when that session is coming to an end or is crossing over into another session. Because at these points in the trading day, in the trading session, that is when a lot of traders get trapped, because they don't understand that is when the institutions come in, when the market makers come in. There are a lot of naive traders who may not understand this, and they get trapped on the wrong side of the trade. And that's what we're going to show you in this session. I'm going to focus on cable because it's one of my preferred currency pairs, and it's my preferred because I'm at the London session. I'm in Europe, London, and also the New York. But when I am involved with forex, I tend to concentrate on the British pound, of which cable is one of those pairs. And it's just a fantastic pair to trade if you are new to this business. And it's great to see the kind of tricks that are played by the market makers at the open and also as we come up to the crossover. Obviously, David is with me. I'm not sure what he's going to be looking at. He'll probably have something to say about cable as well. If you've got any questions, please just drop them into the chat box. The purpose of these streams moving forward is we get so many questions from email, from comments left on Twitter. It's almost getting impossible to reply to people on an individual basis. There are hundreds and hundreds. And if you have emailed me and you haven't had a reply, I do apologize. I am totally overwhelmed with emails. I've tried getting help with them, but that just seems to have made the issue worse. So what we're going to try and do is answer some of these questions, or as many of the questions as possible in these kind of sessions, and then contact the person who's emailed and say, look, we've covered your questions in detail in one of our live streams. And also you get to see the charts, because they tend to be questions about VPA, particular stocks, particular pairs. Oh, I can't tell you the different kind of topics that we get. So that's what I want to say. I'm just going to pass over to David quickly so he can introduce himself and just cover what he's going to be covering, and then we're going to go straight to the charts.
Hi, everybody. A very warm welcome from us in the UK, wherever you are in the world. I know I can see we've got people from all over the place, from the Asia, Far East, and out in even America. So good to have you here. Hope you can hear us loud and clear. The platforms we will be using today are primarily a trading view. It's an extremely popular platform. Some of you, I'm sure, will be familiar with it. It's browser-based. We love it because it allows you to trade from pretty much any platform. You can trade on iOS even, because it's browser-based. There's no downloads required, and it's just constantly being upgraded and improved. It's a wonderful platform, very, very, very popular. We love it. We're actually on Max at the moment, which is why we are using TradingView purely for this session. But in the next few sessions, we'll be on Windows-based machines as well. So we'll have NinjaTrader up. We'll have Anna will have MT4, MT5, and all the other platforms we do, TradeStation, everything else. So just for this session, we'll be on TradingView. If you have any questions, pop them in the chat box. It's the reason we have two people here. One of us talks and the other one's answering chat. So I'm happy to answer those questions for you. I'm going to mute off if Anna's ready to roll, and we will get going. Anna tells me her microphone's dropped out. Bear with me for a moment. She's just reconnecting it. Usual technical problems. For those of you coming along over the years, I'm sure you're familiar with the issues we have are not with trading. They are generally with technical issues. We moved away from GoToWebinar. I much prefer doing live stream because it's more interactive and a much wider audience as well. So that's the reason we've moved to live stream and no longer do the webinars which we've done with GTW for many, many years. How you doing? Okay. Looks like she's got her microphone back. If you don't hear anything, please just tell me no sound, and I'll have a look at the microphone. Bear with us.
That's it. Okay, let me just share my screen and let's have a look what we've got here. Hold on a second. Okay. Right. I hopefully should all be able to see that. I have two profiles, two tabs for my cable. I have here this is those of you who know us will know we have our own proprietary indicators. I haven't got any, I've got very, very few indicators today on the charts because I really want to focus on the price action, the volume, and also the one of the most important elements of volume price analysis, and that is support and resistance and how we use it in the multiple time frames that I will show you. But I do like to use my currency strength indicator, currency flow indicator. It tells us whether there is money flow into a particular currency, whether that currency has now reached a state of being overbought, oversold, or is it still in the process of moving in one direction or the other.
Dropped out, sorry.
Have I dropped out?
Yeah.
Hold on.
Yeah. No.
Apologies, David panicked me and said I disappeared. Right. I do like my currency strength indicator. It's a great visual picture of what the individual currencies are doing at any particular time of the session. But even more important, as I mentioned in the introduction, is when you are beginning to start your own trading. And just as to finish off on that point, with our coaching students, with our the students that we have at the moment, one of the issues is most of them are doing this on a part-time basis, and what we suggest is that they dedicate the time. It's like going to work. So you have to choose a particular time, all things being equal. Obviously, if family issues come up, that you say, I'm going to do this 1 day, 2 days, and actually dedicate a particular time. So you can block out everything else, as I said, family life notwithstanding. Because as I said in the introduction, although this is a 24 6.5 day week market, it is totally accessible at these times. In reality, it is 3 very separate and very distinct sessions. And unless you understand that, you will, if you just go in randomly and you're perhaps not aware of that, that's where you think, oh, well, that move has happened. Oh, I'm going to go into it because I think that move is going to carry on. And you've only got an hour to go before the start of the US session. It suddenly comes to a dead halt. Is it then going to carry on once Wall Street opens, the cash market opens? No, because as I said in the beginning, you have a whole new set of traders that are coming on board. You've got different fundamental news that is going to impact, obviously, the dollar, and if you're in North America, you've got the Canadian dollar. But with at least with the currency strength indicator, as that I have here on the left, you have the opportunity to see where the currency has been, in what time frame, and as I said, is it reaching a point of oversold or overbought in that particular time frame. I use the hour, as I said, primarily because of these 3 distinct time zones. We're coming to the point where it's going to be the pre-market for the American traders. In essence, in reality, there isn't really a pre-market in the 24. It's a 24-hour market. It just rolls over and over. But because it's cut into these 3 sessions, with a distinct open in terms of the cash market and a close, we do have what we call the pre-market. Now, it's a bit debatable. Is that an hour before, an hour and a half? We'll talk about that a little bit later. And because this cable that we've been interested in, as we can see on the hourly chart, it's now very, very oversold, and it looks as though it's ticking up. The dollar not doing very much. It has been bought this morning, moving sideways, partly because we are coming to the beginning of the US pre-market. North American pre-market, not just the US, but Canada and Mexico, I suppose, as well. Right. What I also have on here is the dollar index. Obviously, after the very surprising election that we've had recently, The dollar has been very interesting, and the dollar index has been even more interesting, because one of the things I said on my X feed was that the dollar really did turn out to be the barometer for who would eventually win this election. And that was obviously Donald Trump with a strong dollar. You can see here what the price action has been. We've got the volume point of control down here. It actually started to break higher way back on the 30th of September. I have these yellow lines on my daily chart, and I will explain why I have these daily lines on my daily chart. And it's something perhaps you would like to consider for yourself. As I said, we're going to look at price action volume, but also at support and resistance and the importance of levels on the slower time frames, particularly the daily chart, when you come to your trading desk. Really, the key level was 103. And you say, well, why did you randomly put it at 103? And this is another factor to consider when we look at support and resistance. And I don't think as traders, and we're just as guilty, is we spend enough time looking at what's happened on the left-hand side of the chart. It means scrunching it all up. And you begin to see 103, around about that level. It's never pinpoint, but it's in that zone, as it were. Why is it such an important level? Well, it's acted as a resistance level, but it's also acted as a very strong support level, which it did in this case. Now, I do appreciate that it did actually break the level. And this is where VPA comes in. And what do we see? Hey, what do we see? We see coming down to test with reasonable amount of volume underneath it. We've got a little wick to the bottom of that candle, so we know there's buying in there. And then suddenly we have the breakthrough the level, and you think, oh my goodness, well, that's not going to hold. That was around as you can see with the election. But look at the volume. What does the volume tell you? The volume validates the price, but it also helps to validate the support and resistance level. Is that going to be a floor, or is it going to be a ceiling? And that alone in itself would have told you, yes, that was a fairly dramatic piece of price action. Oh, well, that's it. It's all over for DT, Donald Trump. And then, wow, straight up again. But the clue is there. The clue is here. Before we saw that candle, we didn't know whether that was going to act as a strong floor of support, or was it going to act as resistance, support and resistance. Just remember in the book, those of you who have the book, ceilings and floors. Floors become ceilings, ceilings then become floors. And we need to keep these levels in mind at whatever time frame that we actually trade. So that was the dollar index. Where are we today? Just go back again very quickly. Well, again, we can see VPA. Let me just take off these this hide event. There we are. So we can see here. What do we have here? Well, again, we have classic VPA. You have rising prices, you have rising volume, but you have fairly narrowing spreads, not hugely narrowing, but they're not in keeping. They're not in agreement with each other. Then we've had a little reversal. We've had a little bit buying under here. We've had the pullback, and we've had the pullback in volume, but the fall in volume. And that tells us that this has come to at least to a temporary pause. It may not be a complete reversal, but it's certainly a pause. And that is obviously going to impact the majors, the euro dollar, pound dollar, Aussie dollar. And it's where that buying is going to be strongest for us forex traders, unless you are already dedicated to one or two pairs like I am. It doesn't always follow that I see a fall in the dollar, or a rise in the dollar, that's going to translate in the opposite for the pair. So, for example, if the dollar's going up, the pound may be going down. Sometimes it doesn't. Sometimes they follow each other around. But somewhere there will be a stronger reaction. Now, you could be a trader who say, well, I don't really care. As long as it's a major pair, I'm going to find the strongest in that suite of pairs. Fine. But For me personally, I like to stick to cable, sometimes Aussie dollar, but primarily cable. So that is what Dixie's doing at the moment. Now let's look at the British pound. And here we have quite a few levels, because I have kept them going back some time, as we can see. Let me just expand it first to the most recent, and then we'll look over to the left of the chart. Okay. Obviously, the big event that we've had here in this country, that's obviously the election, but we've also had the budget that caused a certain amount of volatility in the British pound. And the key point is this: with these levels, as I said, they went in at various different times as the structure of the chart was being created, what they call market structure, chart structure. You probably read about this. They say, well, at what point is the market structure or the chart structure going to change? And that means, is there going to be a change of trend? Are we going to go into congestion? Are we at a reversal? And having these lines on your daily chart will at least give you some indication of where you are in the price action. Are you approaching a significant level? Is it likely to be a reversal, or are we looking at a congestion? So for the time being, if you just look at the lines that I've drawn and what I said earlier, why those lines have now become significant, and the more times they have been tested and approached in the past, then the stronger they are going to be. And we can see here, I'm just going to talk generally about it, because the key level was 130 that we see here. You can see here, we can see here, came down to test. It did actually go through, tested and tested, didn't fall. Really, it was in congestion for some considerable time. I have to say, within these individual candles, there would have been trading opportunities in the faster time frame. Some days better than others. If you have a very, very narrow day like you have here, it would have been very difficult, if not probably a day when you think, do you know what, either don't bother with cable or look for another opportunity, which is why you should always have more than one pair. And it did take some time before cable did begin to fall, and it was really all tied around the performance of the dollar index and coming up to the US election. And we did finally get a very, very nice waterfall. Now, this is obviously after the event. Very, very nice trade coming down. What do we see again? We see falling prices, and we begin to see a narrowing of spreads, but the volume stays the same. So what does that tell us? That tells us that there is price support coming in. There is stopping volume coming in, because with that, if we take that candle with that amount of volume and that candle and that candle should be at least the same size as that candle. It's not. And then we look and say, well, is there a reason for that? Are we reaching one of these important support and resistance levels? And we look over to our chart on the left, and what do we see? We pick up this point here. And in fact, can you see here, we have this really, really nice reversal at whatever it was, 120, 126, 127. It sort of stretched across there. It didn't stop there. It carried on lower, but we knew it was actually coming to some kind of reversal. As we say in the book, and David says all the time, it's the tanker effect. When something has fallen with that much momentum, and there's a fair amount of momentum in there, we haven't got volatility candles, but we've got momentum in there, it's going to take time. You can't just put the brakes on and reverse it. It's going to take time. And where did it actually stop? It stopped, as you can see here, we had another little level. And if we move it all the way back here, we can see we've got it did coincide with how price behaved in the past. Now where we are at the moment, we're back in a congestion. So that is our stopping. We did see a reversal yesterday, a half decent reversal. What did it do? It went straight back in here. And it looks like we are possibly going into a congestion, which kind of marries up with what we saw in the on the Dixie. So that's what I do with the daily chart. Now, within those levels, if you like, what you can also do, and this takes a little bit more, you have to be a little bit more creative about this, is you can, within those, you can put some levels in how you define the pre-market. For us here in the UK, I would probably look at something like the European Open, because that gives me a reference point as to say, well, an hour ago, which was 7 o'clock, so London is 8 o'clock, cable did this either to the top side or bottom, and at least it gives me a reference point, and I've got something that I can work with when the market opens. Because the market at 8 o'clock just does its own thing, goes up, down, volatility, but it will either stop at that level or break it. And then it gives me, if you like, what I call reference points on the charts before it settles down and the direction of the market is then established. And obviously, what we also have in the UK now, at 7 o'clock, we have fundamental news releases. We never used to have that. They always used to come out at 9:30, but now it's 7 o'clock. In the States as well, in North America and Canada, our time 1:30, which is what, 7:30, David? 7:30, I think.
Yes.
Yes, it's 7:30 Eastern time. 8:30 Eastern time. That is when you get a lot of news, and you could take that to be the pre-market. That's before the cash market at 2:30. But I'm going to stop there. I'm going to see what questions there are. If you have any questions, please put them in the chat box. I'm going to pass. Can I pass over to you, David? Is that okay? Because I'm sure you're fed up with listening to me speak.
Okay. There we go. Sorry for the slight delay. It's just we have to unshare on Zoom, and I then have to share my screen. So it's not quite as seamless as it used to be on GoToWebinar, but hopefully we will speed up in due course. I've got 2 or 3 tabs open. I've gone to the yen pairs. Let me start, if I may, over here with the currency matrix. Just move the chat window out of the way a little bit. There we go. And if you're not familiar with the currency matrix, what the currency matrix is, it's an indicator representation in a very neat way of what effectively you can also create on the screen yourself. And whenever we're trading within the forex world, we want to try and trade with the universal flow of sentiment. And by that, I mean, if everyone is buying the dollar or selling the dollar, if they're all selling the dollar, ideally, that's what we want to do as well, purely because that in itself will be a lower risk proposition. Because if you are trading with the dominant flow, with the universal flow of sentiment at that point, then by virtue of that fact, the risk on that trade is lower than if, for example, you are trading against the dominant flow, which is perfectly fine. We all do it, but it's done in the knowledge that we are doing that and not in a lack of knowledge and just from the realization after the event. So whenever we look at a currency pair to trade, we always should have an eye on what the market is doing per se. Is the market universally buying that currency, or is the market universally selling that currency? And that, in essence, is what the currency matrix does. It works on a very short look back period. It only looks back at 7, and you can adjust it accordingly. But at the moment, I've got it set to 7 because it's very much, if you're looking at this, it's very much a scalping tool, if you will. It's not a long-term trend tool. It's very much designed for intraday traders, for intraday scalping. So it's set to a relatively short period of a period of seven bars. So it will look back, whatever your time frame, it will look back on 7. As I say, you can adjust it. You can have it on 14. You can even have it on longer. The principle is very simple, and I've selected the yen. You can select anything you like up here in the settings. As you see here, I've got the filter here for yen. If I put none, then they will all appear. There we go. And we've now got the whole array. And what this is telling us, these are different time frames. So I've got a 3-minute here, I've got a 5-minute here, and I've got a 10-minute here. And as always, and I'm sure many of you come along regularly and you'll know what I'm about to say, that I'm a greedy trader. And therefore, I like to look at I'm always looking at extremes. I like to look at extremes on the currency strength indicator because I want to get in early. So I'm always looking for those currencies which are overbought or oversold, matching them up. And hence, I get into that trend early. I'm not missing out on the start of the trend. Now, that comes with a caveat because by virtue of doing that, I have to put more risk on the table because my stop loss has to be set that much wider. And the reason it has to be set wider is because that trend has not yet started. And therefore, I've got to allow for any consolidation, any sideways movement that goes on inevitably. All I know is that at some point that currency will move. It has to, because all currencies move at some point. It's just a question of when. So we have to be patient. And if we're going to wait for something to happen, we have to set a wider stop loss. If we're jumping on a trend, different scenario, we can make our stop loss, we can adjust our stop loss to a much tighter range than if we're physically waiting for something and uncertain exactly when that event is like to occur. So the same with the currency matrix. What I look at is I look at the extremes. I'm looking up here, so I'm looking at the euro yen, which is very strong, and I'm looking at the pound Aussie down here, which is very weak. So all I know at that point is that the pound is being sold very strongly. Now that could be strong selling of the pound, but it equally could be strong buying of the Aussie. And up here, it's strong buying of the euro. And is it strong selling of the yen? And that's really what I want to know. So what we do is we filter out to get a perspective on that. And we click on the yen. So we're going to filter on yen. We click on OK. And what that visually tells us is that several things, but primarily what it's telling us is that we have a universal view of the yen right now. And that universal perspective on this fast time frame, bear in mind, this is a 10-minute chart. At the moment, that the yen is being sold and all these currencies are being bought. So we know at the moment on this 10-minute time frame that was the situation as of the last 10, 20, 30 minutes, however long the look back period was. So ideally, what we want to see whenever we're trading in whatever time frame is we want to see this stacking effect, because when you see them all grouped together, and the yen is a great pair to do this with because the yen is always the counter currency with yen when yen pairs, and therefore it always stacks very neatly in this way. So when you see them all at the top or all at the bottom, it's very visual. And it's what I call a complete house. In other words, we've got them all grouped together. Now, of course, moving across to the 3-minute and the 5-minute, what we're starting to see here is we are starting to see the unraveling, if you will, of what's gone on here over the last, I don't know, maybe an hour or so. And the reason we're seeing that unravel is twofold. First of all, we are starting to see these break apart. So in other words, no longer have we got a universal view. And secondly, what we're also seeing here is we are starting to see these pairs now drop. And as you can see down here, we've got the Aussie yen, which is flipping about, and we're starting to see these others move towards it. Now, what you're visualizing here is if this continues for any period of time and all these pairs continue to drop, and then that is reflected across into the 5-minute, and they start to unravel and start to break down here as well. And ultimately, this starts to disassemble also. What you are witnessing in a graphical way, without even looking at a chart, is the unwinding of that sentiment. In other words, that sentiment where we saw strong selling is now becoming strong buying, or vice versa. So in looking at, and this is whether we're looking at charts in multiple time frames or whether we're looking at indicators in multiple time frames, this is always the key, because you are seeing visually either a trend breaking down or a trend being built. For example, if on the 1 minute, or 3 minute rather, beg pardon, if the 3 minute, if they're all down at the bottom here, and then gradually you start to see them unravel and they start to go up the ladder here, and eventually they end up at the top here, what you are witnessing across that time horizon is a trend developing. And remember, a trend will always start in its fastest time frame. It will start in, I mean, you can take it to an extreme. You can take it to the charts that I trade intraday, like the 15-second or the 30-second. That is where a trend will start. It will begin there. And if it's a strong trend, it will move into the 1 minute, and then to the 3 minute, and ultimately the 5 minute, 10 minute, 15, and right the way on down the chain for as long as it has momentum. And it will only stop, let's say in the hourly, when that momentum runs out of steam. But in that period, you have seen a trend develop pretty strongly across the piece. Now, what we're seeing here is quite interesting, because whilst these started to move down, it now looks as though potentially that slight change in sentiment is really not being followed through, because these now appear to be stacking back up at the top again. So we're seeing a replica of what we're seeing on the 10 minute occurring over on 3. So if we're, in other words, if we would look at the 3 minute chart for any of these pairs right now, they would probably be in some sort of sideways, because we've seen them fall slightly and now they seem to be recovering. So that's the currency matrix. As I say, it's an indicator based. It brings all this information together very, very quickly. It's very fast. It's very neat. It encapsulates all that information. You can, of course, create this yourself and just have it on 6 or 7 charts, where, of course, you would also have the benefit of looking at those charts with VPA. Very quickly onto the currency strength indicator, which I know Anna mentioned. I haven't isolated any pairs out here at all. This is on a faster window, if you like. We've got 1 minute, we've got 3 minute here, and we've got 5 minute here. But what we're seeing here is really what I was talking about there. We are seeing, for example, the euro here. That's been pretty strong over the last hour and a half, whatever. And in contrast to that, this magenta line, the yen, has been falling, and it's fallen down to oversold. We've got the euro here, which is, we had this sort of blip, which we were kind of watching there, and now it's picked up again, and the yen has kicked over again. And that's what I referred to when I said the sentiment that was perhaps showing around about here, where we were seeing a falling of the primary currencies and perhaps the yen strengthening a little bit, that was then reversed here, rolled over, and the euro is now climbing higher along with some of these others, the pound, the Aussie, that's kicked up as well. And what we're always looking for, as I say, what I'm always looking for, I'm always interested in what is going on at the edges, what is going on at the extremes, what is going on in overbought up at the top here, and what is going on in oversold down at the bottom, because those are the points that you can pick out the opportunity of getting into a trend or the development of a trend early. As I say, it does mean you have to be patient and wait and set a wider stop loss, because you will have to allow for this sort of price action to develop, where we go into sideways congestion at these levels, and the same down here, as is happening now. But all you can be guaranteed is that at some point that yen will rally and the euro will fall, or whichever pair you choose to select. And really, that's what the CSI is all about. It's looking at telling you when currencies are potentially overbought, potentially oversold. It also tells you a lot of other things. It tells you which pairs not to bother with, because if they're moving in the same direction, then clearly there is no trend. So, for example, here where we've got the Aussie falling, we've got the Canadian falling, there wouldn't be any trend at the moment because the two currencies are moving together. And the analogy I always use is of two trains leaving a station. They're leaving at the same time. They have no differential speed, and therefore there's no trend It just doesn't exist. There's no opposite momentum, if you like. What we're always interested in is in opposition. We want to see opposing pairs. We want to see strength in one that's falling and strength in one that's rising, because that will give us the strongest trend. Okay, and we're seeing pretty much that. Let's just realign these. I've got the euro yen here because we just happened to talk about it in that piece of price action. These are pretty fast charts. I've got 15-second, 30-second, 1 minute, 3 minute, 5 minute, and a 15-minute. Perhaps if we start with a 15-minute and we'll come back down off the. I'm not suggesting that you trade those sorts of time frames. I use them myself because I've been doing it for a long time and I find it very comfortable. And it's very much intraday scalping at speed. Primarily, I do that on the indices, where we're talking quite significant value of points, but you can apply it in any which way. Now, this is, as I say, on the 15-minute from earlier on today. We had the usual volatility around this area around the London Open. And the reason that we use multiple timeframes, one of many at any rate, is to give us perspective on what the indicators are telling us. And in particular, I just want to focus on the volatility indicator here, because whatever happens on a slower time frame will ultimately carry much greater significance than what happens on a faster time frame. And that's just a universal statement that you can apply to any indicator or any VPA that you see, or any levels or anything to do with a chart. If you see a volatility indicator on a 15-minute time frame, that has huge significance, because it means it has more significance than if you see one on a 5-minute, which has more significance than one on a 1 minute, and so on down the chain. And if you see one on a 15-second or a 30-second, which we see all the time, they have some significance at that level. But if you're seeing one on a slower time frame, that is much, much more important, and it will carry much greater weight because it carries the weight of time. And again, you can go right the way down. You could say, well, an hourly one is going to be more significant than a 15-minute, and so on. And that's why multiple timeframes are so important, whatever you're trading. We see it here. For those of you not familiar with the indicator, it signals several things. Where it's associated with very high volume, then the market makers are participating. We can be assured of that. And the reason volatility is such a powerful element of trading and so significant is because it generates the fear of missing out. And let's face it, we sit here, we're here to trade, we're here to make money. And this is probably not a bad example. We're sitting here and we're looking at this and nothing's happening. Now, we might go off and look at other instruments, other markets, whatever, but let's say we're purely focused on, for whatever reason, we're trading euro yen. We're sitting here and there's very little going on. And then all of a sudden, this happens. And we've been sat here for an extended period of hours. This is in overnight. So, that's what happens. And the market then breaks, and it breaks suddenly and quickly. We're here to make money. Our instant reaction is, I can't miss out. This is going to be some easy money to make. And we jump in. The market makers are very familiar with that. They use it all the time. They're very well aware of how emotion is generated in us as traders, and we jump in. And what the volatility indicator does, it displays in real time the fact that we now have volatile price action. And by volatility, I mean an indicator that is based on average true range. That's how it works. It's looking at the price action for that instrument in that time horizon, and then giving us a heads up instantly. And the reason I say instantly is because it appears before the candle has closed. So in this example, it would have opened, probably fallen quite dramatically. And at that point, the trigger would have alerted us the fact that we now have a volatility candle, and it would have alerted us well before the 15 minutes had elapsed. On a 1 minute, it's not so important. On a 15-minute, it is, because what we expect to happen thereafter, because this is generated by the insiders in one of two ways, it is either genuine or it's a trap move. In either case, we've got volatility. What we expect to happen is one of two things. either for congestion or a full-blown reversal to follow. So if we are in a trade, if you had a trade on this instance, you close out. And that's what I do 99 times in 100. It's very, very rare that I would sit through and take the chance that this is going to carry on. I don't want to sit through congestion, and I certainly don't want a reversal. So I'm out. End of. At the very least, if I was trading multiples, I would leave one contract to run maybe, but generally speaking, as I say, 99 times out of 100, I'll just close out, assuming it's in my favor. If I'm short, it's in my favor. Great, happy days. Close out, get out of it. Because that is what is likely to happen. And it's happened in this case, as you can see, we had this very strong down candle, ton of volume underneath. So we know the market makers are in there for sure. What are we expecting? Congestion or reversal to follow, and we get a reversal and in spades. And we've now come up to the top of this candle. From a trading perspective, if we were looking to jump back in, we always wait until it has cleared either the ultimate high or the ultimate low of that candle. But that's what we're expecting to see. Now, what's interesting about this move, and I've also got the VRSI below, the other indicator. This is a new volume indicator, the volume relative strength indicator. So this is traditional volume. This is the volume relative strength indicator. And what the volume relative strength indicator is doing, it is comparing the strength of volume. It's what we call a pressure indicator. It's telling us how much pressure is being delivered in that momentum. And what you're seeing here on the volume perspective is you're seeing, generally speaking, falling volume. So we have a rising piece of price action, but we have volume which is falling, generally associated with the green candles. We're also starting to see weakness in here because wherever you get narrow candles, relatively narrow candles, indeed here we've got one with high volume or relatively high volume, that is telling us that that potentially is running out of steam. And that is also what the VRSI is telling us. When it's on the underside of this line, it's telling us this is very bearish. And it tells us it's bearish in one of two ways. First of all, it tells us with the color, and then it tells us with the extent. And you can see how bearish it is here with the height of this volume bar. And what's great about the VRSI is we read it in much the same way as we do with volume. We're always looking at highs, we're looking at lows, we're looking at the patterns associated with the volume that follows thereafter. Is volume falling? Is it generally rising? What is it doing? So we look at individual cases of the volume and price relationship, but we also look at it in terms of the pattern that duly follows. And what we're seeing here is a general weakening. Remember, this is comparing one volume bar with another. We are seeing here generally weakening of the volume relationship as we've got a rising trend. And now we get down to the fulcrum point where we are starting to see a little bit of bullish momentum coming in. But that bullish momentum at the moment is relatively weak, purely based on the fact that yes, it has changed color, but the height of these volume bars is very small in comparison with what went on down here. Therefore, whilst there is a certain amount of bullish sentiment there, it is very weak for the time being. So that's the volume relative strength indicator. And you can see it in action better over here. If we go up on some of these faster charts, let's go up onto the 1 minute, pop that up full size. There we go. And of course, this is entirely tradable. This is a very tradable piece of price action. Once again, remember, this is a 1 minute time frame. Here's our 1 minute volatility candle. What are we expecting? Congestion to follow, which is what we've got. We continue on through here. And I wouldn't be looking to get into this if I was trading this as a 1 minute time horizon. Where would my entry point be? It has to be once we have cleared the high of this candle and we've got a very nice ceiling of resistance building here, which is then duly breached. Is it breached with good volume? Yes, not too bad. But what's interesting here on these two candles, and I'm not suggesting that you trade 1 minute, but what I am suggesting is you use it for practice because it's a great tool. Everything happens at speed. Everything you see happens in real time and very quickly. And it really sharpens up your VPA analysis. What we see here is a move higher. This looks okay. If that's our benchmark, then why have we got more volume on the next candle, but narrower spread? So there is an anomaly between these two candles because on this candle, this amount of volume generated that much amount of price, and on this candle, that much volume, in other words, an increase in volume, generated less spread. Now, that doesn't mean that this is going to roll over. What it does indicate to you that perhaps this trend is weakening a little bit. We move on up to this level. What have we got? This candle, we've got decent volume. We've got a wick to the upper body, very narrow. It's looking a little bit tired. It doesn't automatically mean that this is going to pause and we're all going to go short all of a sudden. But if you're long this, it's telling you that there is a certain amount of weakness in this trend. And when we look at the VRSI, the candle height here, I'll just move this up a little bit if I can. There we are, I'll just pull that down a little bit. Okay. If you then look at the whole VRSI from a perspective basis in the same way that we do with volume, because with volume, we're always looking to benchmark. We're looking at, how does this candle and its volume associate compared to something else? So, when we look at this, as we did here, if we assume this is our benchmark, no reason to suppose it wasn't, why has this one behaved in the way it has? So there has to be a little bit of anomaly here. And the same way, when you look at the VRSI, we've got these bars are falling, generally speaking, and that is telling us that this doesn't look terribly strong at the moment. And in addition to that, when we look at the height of these compared with what went on over here, they are very, very much reduced. So you put all that together. Does this look like a strong trend? Is this something I'm going to stay in? No, not at the moment. It's looking a little bit weak and weedy. But that's just the conclusion we've drawn, just simply looking at a few candles on the 1 minute time frame and what they're revealing. Now, if we watch this coming in on real time, in fact, what I'll do is I'll pop down onto, let's go down to the 30-second, which is underneath. And remember, what we're doing with the 30-second chart is, in effect, and you may never have thought about it in this way, but this is in effect what you're doing. And it doesn't matter whether it's a 30-second or whether you're looking at a 5 minute on a 1 minute. If you're on a 5 minute chart and you pop down to the 1 minute time frame, effectively what you've done is you've broken that last 5 minute candle up into 5 1 minute candles. In other words, you have taken a look inside one candle and broken it down into its constituent parts. That's all you're doing. And that's all I'm doing here. I'm breaking this little piece of price action that we saw there on the 1 minute. I'm breaking it down into now my 30-second, and I can go faster still, and I can go down onto 15-second over here. There we go. Let's pop that up there. And the second reason we do that is first to get a perspective on the single candle that we want to disassemble or a group of candles that we want to disassemble. But secondly, to get perspective, because what this gives us is invaluable insight into what is happening on the volume. Because if you look at this now, have a look at this candle here. What is that telling you? It's pretty much the highest volume of this piece of price action from, which is what, I don't know, half an hour or so. We've got a lot of volume going in, and yet we've got a narrow spread candle. But that's anomalous. It has to be, because if we've had that much volume, by all things being equal, we should expect to see a candle up here somewhere, and we haven't. We don't see it. We go into congestion, fine, we're in congestion. We don't, we can't infer everything from every single candle that appears. But then we get these two little candles here. Again, pretty high volume, well above average. This is an average line here, well above average again, very narrow candles, very weak. What is that telling us? Well, it's telling us that this trend that developed here was not particularly strong. It wasn't that strong anyway to start with, because it wasn't going up in a nice slope like this. It was going up at a fairly shallow angle. And therefore, it's no great surprise to see it when it rolls over to start breaking down. Now, the question you might say is, well, where would you get in? And what I would have done is I'd have a floor here, and I would have had a ceiling probably around there, maybe a little bit higher, but certainly around this level, because the bodies of the candles are creating that. Forget the fact you've got one little wick poking through here or a little wick there. It's predominantly the bodies that are forming that platform there at 162.95. And therefore, that's the point at which I'd be looking potentially to get in. Now, when we look at a get in, we're reading these candles, what's going on, what's happening. we're seeing a little bit of buying coming in here because these candles have narrowed. They haven't widened, which is what we want to see if we were looking at a true price waterfall. They've narrowed. We've got a little bit of buying coming in here, and we'll just see what happens with this next candle. See the volume coming in. We've got a lot more volume coming in. We're coming up to 1 o'clock our time, which is more or less the open of the London US Forex session. And then we're into news at 1:30 our time, half an hour later, and then an hour and a half later, we have the cash markets open. So we expect to see volume pick up anyway. Strong volume under that one. What's happened to the next candle? A little bit of buying under that one because we had a wick to the lower body. Let's see if we break down on the next candle. This is what we call a 2-bar reversal. So if you overlay this candle on that one and drop down onto the 30, we've got a similar thing there as well. This is a nice candle pattern, always very valuable. What happened here? The market went up. It promptly came down. If you overlay those two candles, you've got a very shallow body here, probably a little green body, and a big wick to the upper body. So what is that telling you? That's telling you it's weak. It's very easy to overlay two candles, one on the other. Very difficult to do 5 or 6, which is another reason we use multiple time frames, because you can't do it in your head. But 2-bar reversals, you can. It's much more straightforward, and we do it all the time. What happened on the next one? We had some buying coming in there. If I was short, I'd be a little bit concerned because I'm looking at some buying coming in there. I'd wait for the next candle to develop. That looks okay to me, a little bit of a wick, good volume under it. So the selling pressure is still being applied. So I'm perfectly comfortable still riding this trend. See what happens with the next one. And this is all you're doing. When you see a signal, it doesn't automatically mean I close out the position. I wait for the next candle to form and what it's telling me. And then I will go down and break it back on the faster time frame. So if the 1 minute time frame is my predominant charting time frame, I will be constantly moving down onto the 15 and the 30 to see what that is telling me. Is this telling me to get out? Is it telling me not to worry? What is VPA telling me at this point? And that's what I'm doing constantly. And whatever your time horizon, if you're on 5, 10, 15 minute, or let's say 5 is your primary time frame, and you're on TradingView and you have the luxury of all these time frames, then you constantly break that down. You go and look at your 2 minute or your 3 minute. What does it tell me? It doesn't always tell you something, but often it does. Like here, for example, I'm sitting here, I'm short, I'm notionally short. What does this tell me? Well, first of all, we had some buying coming in because this stopped. But then when this second candle formed, the volume fell away. So in this reversal higher, I'm encouraged by the fact that we've seen falling volume on those two candles and not rising, which is great, which means happy days. This buying that I'm witnessing right now is really not strong enough to cause me an issue. In other words, it's not strong enough to reverse this trend for the time being. So I'm just going to sit tight and just see what happens next. Now, the next thing that I'm concerned about right now is we're looking at back to levels, because where we're trading right now, we're in a very, very strong area right the way through here of congestion. If I narrow it down, probably like that, looks a bit better. There we go. So we're in a very strong area of congestion. So from holding this position, I would now be concerned about it coming to a pause point by virtue of the fact we've run into some congestion here. And certainly I would have a very, very strong eye on that and be concerned about it. Now, what's interesting on this candle, we've got some strong buying coming in. And again, you can overlay these two candles. What does this create? This creates a little hammer, doesn't it? Because you'd have a little red body, you'd have a wick to the lower body coming down here. So you'd have a little hammer, and you've got some decent volume there. So I'm now expecting this to reverse. I don't know how far it's going to go, but for sure, I'm expecting it to reverse. And I might be out at that point, depending on what else I'm seeing elsewhere. Let's have a look at drop down onto the 1 minute. Let's hop down over here. There we go. There's our 2-bar reversal here. Increase in volume. We're expecting something to happen. Now, again, from a levels perspective, we might say, well, we could be running into congestion here. And that's true. But we've got all this price congestion here. So it's no surprise to see it pause at that point. Plus, as I say, we're coming into US session. We're going to start seeing news on the horizon and markets pausing and all the rest of it. And often what we see, going back to crossovers, you will inevitably see, I'll say inevitably, invariably, what you will see where we come from the London session into the US session is you will often see a complete reversal in sentiment from the morning session to the afternoon session. So if you have made some good money in the morning, and I'm talking about London time, our time, in other words, if you've made some good profits and you're running a position and you're coming into the US session, be very, very aware that when the US markets got underway, you see this many, many times where that strength, that sentiment that was expressed in London is completely reversed, and we see the opposite expressed in the US market. And you can see the VRSI there. Right. I'm going to...
Shall we wrap up after? Pass over to me.
Yeah, I'm just going to pass back to Anna. So I will switch I'll stop sharing and I will switch myself off if I can find the... there we go.
I mentioned earlier in the live stream that I have these levels on the daily, and then I have what I call internal levels within those wider levels, those slower time frame levels, more suited to what I call the pre-market, the highs of and the highs of the session. And we had a really nice example of what I mean on the 5-minute chart for cable. Now, the danger, obviously, with doing levels is that we could go on and on, putting lines in, and by the end of the day and by the end of the week, we've just got a blizzard of lines. So we do have to be a little bit, use some discretion, as it were. And I haven't, these are just manual ones. I haven't even compared them with the support and resistance levels that I use that are indicator based, primarily our own Camarilla level, pivots, Camarilla levels. And when I do put them on, it's quite extraordinary how they coincide, how there's a confluence, if you like, which makes that level even more important. And as I said right at the beginning, what then validates that level is the price action and the volume. Okay, so this is the 5-minute chart for cable this morning, and we can see here it is in this range that we took off the daily chart. Because it's a 24-hour market, as I explained, where do you put an interim level? Where do you put the internal level to coincide with the time zone? Well, as I said, the hour in fundamental news comes out at about 7 o'clock, which is also the start of the European session, and it's around about there. And I look to see, well, what's happened around 7 o'clock, or reading up to 7 o'clock, when you have that open. And we can see here, this is what Europe opened. It didn't get beyond there. In fact, it actually sold off. And we have another really nice example of volume price analysis, where you have falling prices, you have narrowing spreads, and you have rising volume, but you've got a narrowing spread counter. So that tells you that isn't really going to go very fast, and that's at 7. And it then reversed, but then it just did nothing. It just went sideways, 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 and we come to 8 o'clock, which is the open of the London session. What happens at 8 o'clock? I had this line here. Immediately, the price, we've ended up with a shooting star candle in this congestion. It went up, reasonable volume, not a lot of volatility this morning, which is quite unusual. Usually, sometimes we have a lot of volatility candles triggered at this at the open, and we didn't get past this open here, this level here. It certainly didn't get anywhere near the level from the daily chart, sold off. In fact, we had efforts to rise. We have wicks to the top of the candles, knocked back. We've got rising volume under there as well, but it really didn't do very much. And we have anomalies as well. We have reasonable volume on the up counters. You have to also remember, volume is also relative to the time. And when you have around the open, this is only 10 minutes after the open, you would expect to see more volume. You'd expect to see, because there is more participation. You tend to have more traders at London than there were at the tail end of Asia, and also even in Europe. In fact, we've got two financial centres open. We've got Europe and we've got London, and we've got rising volume here, but the price isn't going anywhere. It's compressed. If that was going to be a genuine move higher, you would have expected a candle to be much higher effort. Always having in the back of your mind Wyckoff's law, effort and result. The result must match the effort. If it doesn't, it's an anomaly. If it's in balance, it's fine. Carry on. It doesn't, and then we begin the move lower. We have this nice candle here, but even that is it's a down candle. We have a wick to the top of the top of the candle, and we then have some stopping volume coming in. It doesn't carry on. You say, well, is that sort of slightly anomalous? Well, it could be, because have we got anything to benchmark it against? This is just the start of the session, and sometimes if you have a lot of volatility, which we don't this morning, sometimes we say to traders, well, wait a little bit. And they say, well, how long should I wait? Should I wait 5 minutes, 10 minutes, half an hour? It really just depends. You have to let the chart, try and give you a clue as to what is happening. And you see this by looking at the candle, looking at the volume. Does it look a bit suspicious? And as David has shown, you go down to a faster time frame, because in that candle, this is a 5 minute, you go down to the minute chart, you're breaking that candle down. Did you see anything in that 1 minute chart that could possibly tell you that, in fact, there was volume coming in? It was supportive of price. It's like a stopping volume. But again, it didn't go very far. And then we have a period of congestion before, if you like, the water, let's call this a waterfall, takes hold, and we get some momentum into this move. We've got a lot of volume. We've got big candles. All the time you will have wicks to the bottom. There's buying coming in. Maybe there are buy orders at these different levels. And then when does it actually reverse? And we have a classic candle under here, which is this lovely hammer candle with a lot of volume underneath it. And that tells us that we are certainly reaching a significant pause point and a possible, but we don't get a V-shaped reversal. What do we get? We get a congestion, and then we actually get another little hammer candle with slightly less volume. Now, could you say that's some kind of test to see whether there's any more selling coming into the market? But what it does tell us is that the selling has actually been exhausted. Why? David actually came up with this kind of nuanced two-volume price analysis. It's back into an area that has seen heavy selling before, but it hasn't followed through. And if you like, I know a lot of us like to go off a single candle, and a hammer candle is a very strong candle, and we have seen V-shaped reversals where price just simply goes that way. This is going into a congestion, but this point here tells us that this cable is going to reverse. But as always, markets fall faster than they move higher, and we just have to be patient. But it's a nice little move higher. We have opportunities both to the short side and the long side. Is there anything you want to say about that, David, or are you okay? No, that's it. Next time we'll do more. We'll have more insight into breaking down the candles on the faster time frame. But I just wanted to show you the 5 minute chart. I've really just wanted to focus on levels on the slower time frames. That's particularly the daily chart, how important they are, and then the levels that you can put in sessions. Let's call them session levels. So that's the high of today's London session. This is the high of what I would call the low of today's session, and I use one of these, and I do color code them, but as I said, you do have to be a little bit careful, because you could end up with a very pretty chart with hundreds and hundreds of lines, and you can confuse yourself. But the most important are always levels on a slower time frames, and as I said, you can then, this is what I do, Where's my Camarilla disappeared? I just put it on and see, well, what does that? And well, there we are. What does it tell me? It's actually quite important. The two most important levels in the Camarilla indicator are the 3 and the 4. And that was even before I'd put them on. This was purely looking at the price action and the volume. Indicators are there to support your trading decision. They don't make the decision for you. They're there to either validate it, or the volume validates it, but also to say, it gives you a higher probability that the trade will develop as you think it's going to develop. And where is this going? It's clearly going to test the third level, but it's 1 o'clock. It's the US pre-market. I've looked at the economic calendar. There isn't any particular news for the US. There's a lot of Canadian news, but not for the US. So that's what I've got to say. I don't think there's any more questions. Oops, that's it. No, you've done everything. Right, this is our first venture back into live stream. We will be back on a more regular basis. We want to do specific stocks, indices. We're just going to focus on specific markets. If you've got any questions that perhaps you haven't thought of today and you want us to cover something, if you could drop me an email, that's anna@annacooling.com, or you can put a question on my X feed and then it'll be a topic that we can pick up later. Let me see. Would you explain about a series of narrow with small with huge volume? I've encountered in futures market and failed mine to explain. Yes, Enzo, we will do that, but we will look at the futures market in particular. That has happened in a very interesting way recently on the NQ, and that kind of deserves a session all of its own, and it's certainly one that we will be covering because, as you say, narrow spread candles with a lot of volume, they are very, very important, particularly when they appear at these key support and particularly resistance levels, because they can indicate that there is a problem ahead. So certainly something that we will cover in detail. Also, to let you know, one of the reasons why it's taken so long for us to come back online is the audiobook of volume price analysis is almost ready. There's only a couple of chapters left to do, then it's going off to be cleaned up and edited, and we hope to have it out very, very soon after that. I think the editors only need about a week. Is it a week, David? They need about a week. So anything else you want to say? Or is that it? It just remains for me to thank you for coming along. I hope you enjoyed it, and we will see you again very, very soon.